On the show this morning, we're looking at impact of monetary policy on Nigeria's foreign reserve. A couple of things we'll look at: the stability in the FX market, what the CBN has done so far in the management of inflation, exchange rate, and of course, the robust foreign reserves that we are currently having. For the $6.1 billion we're having currently in terms of our reserve. But before we bring on my guest who is joining me from London, let's look at the federal allocation for December that was shared yesterday between the federal, states, and local government. Indeed, the total distributable revenue from what was disclosed by RAMFAC yesterday, talking about revenue mobilization, allocation, and fiscal commission, is 1.969 trillion naira. That is a very huge one. Distributable revenue, statutory revenue, 1.084 trillion naira. Tax revenue is 46.507 billion naira. Electronic money transfer levy, talking about the revenue, is there about 38.110 billion naira. Total gross revenue, 2.585 trillion naira. Cost of collection, 104.697 billion naira. Transfers, refunds, and savings amounted to 511.585 billion naira. If you look at the breakdown of the allocation, how it was shared between states, local government, of course, the federal government got the highest share, 653.500 billion naira. The state government, talking about the 36 states put together and the FCT, got 706.469 billion naira. The local government councils, 774 local government councils in Nigeria were allocated 513.272 billion naira. We hope that this allocation is going straight to the local government account, since, of course, the local government autonomy is in place right now. We hope that many state governments will allow the local government to operate freely, so that government can indeed be closer to the people. 13% of mineral revenue, talking about 13% derivation for the oil producing region. We have 96.083 trillion naira. Very huge one there for this state. Let me get a reaction of my guest on the show this morning, Dr. Sam Omale, the President CEO, Rock Global Investment Network, who joins me virtually from London. Good morning, Dr. Sam.
Morning, Mr. Akogu.
Glad How to have you on Business Daily again today. You saw the federal allocation for the month of December, a very huge one, 1.969 trillion naira shared between federal, states, and local government, and of course, the oil producing states. What do you have to say with regards to this huge amount of money compared to the infrastructure development we're having in some states?
Yeah, I've always fought against the use of language. The language we use, this sharing. The sharing is so uneconomical, it's so unprofessional language that Nigerian government uses. When you say share, they take their part and use it the way they want. And if you compare what the states are getting now and the local government are getting now, you compare them to the actual infrastructural development in the various states. Take my own state, for example, Kogi State. They don't match. This present government they don't match the quantum of allocation that have been given to them. They don't match. So one is asking, what are they using this for? A fallout, and a large part of number of this is coming from the subsidy that was removed, and so increase in the allocation to state governments had always been on the upward trajectory. But the question still remains, is it impacting, is it reflecting on the infrastructural development and even the life of the people?
That's a big question. There are also questions about the amount that is federal government is allocating to itself. I mean, they appear to be taking the largest share, 653.500 billion naira, compared to what the 36 states are sharing, 706.469 billion. Do you think the federal government is taking so much?
It is taking too much, and that is abstraction. That's why there's so much abstraction to the center. And until we're able to decentralize, until we're able to weaken the center, this large sum and huge amount of money given to the center will remain the attraction to politicians. They are running for office because of that huge allocation. And if you can if you can take that incentive away and empower the regional government, the state government more, let the center be weak in the sense that they take care of specific things, defense, law, some of these specific that the federal government takes charge of should be the case. Otherwise, this huge allocation to federal government will continue to be an attraction, an incentive for people to run for government. And that's our big problem.
Indeed. Finally, before we move on to the next topic, 513.27 billion naira was allocated to the 774 local government area in Nigeria. If you want to share it, it's not up to $1 billion naira per local government. Do you think this amount is small? I mean, or if this amount indeed get to the local government, based on the local government autonomy, they should be able to do more?
They should be able to do well. I mean, you have just done the mass. If the average take that will get to each local government area is about under 1 billion, what can they do with it? It's salaries. They cannot even pay salaries even with that, monthly salaries. They can't do that with. For the fact that also not all of this amount even goes straight to them, and even if they go straight to them, they have no ability to spend it without taking permission from their governors. So there are some weak things that are all over the place, and until these are done, we'll just be throwing money away. Who elected this chairman of local government areas? They are stooges of their governors. And until people are allowed to elect their own local government areas, chairmen in their areas, and monitor them, impeach them, remove them, whatever they want if they don't perform, we are just wasting money. We are still wasting our energy. So things have to be done well first. The election is important. And also their independence is also important. I don't think they have independence. So even if you give them all the money in the world, they are not able to use it to develop this, the areas. That's a fact on ground.
Indeed, that's a fact on ground. Well, we hope that the state will allow local government to operate freely, since already they have been granted autonomy. And of course, local government is the closest government to the people. When they operate freely, the some of the basic amenities will be provided for the citizens. Let's move on now. Look at the impact of the CBN monetary policies on Nigeria's external reserves. Give us an overview of what you make of the MPC now, or MPR, under Governor Oluyemi Cardoso so far in office.
Without being sentimental or whatever, I would say straight away that this governor has been the most professional governor Nigeria has had for a very long time. Professional in the sense of his personal demeanor and the leadership he brings, the courage and the conduct with which he conducts the central bank as a management is very, very professional. And that what brings respect internationally. I've not seen him, partying with bank managing directors and even the government. He's so apolitical. He does his job professionally, and that was his drawing or bringing the confidence in the marketplace for the decisions he has made. All the decisions he has made so far, the MPR and all that, has been made based upon data he has. He has not done it from the whims of his brain. Data is given to him, he interprets them correctly, and up to now he has been interpreting them correctly. All the MPR results that have arrived at have been spot on. Is realistic, and I think we're going to have a more stable and steady central banking in Nigeria.
Indeed, quite interesting. At a point when the CBN governor maintained the MPR as it were 27.5% for a very long time, a lot of stakeholders were calling for the CBN governor to ease the monetary policy rate at a point, not knowing that probably the CBN governor was seeing something that we were not probably seeing. What do you think he was actually seeing at the point where some stakeholders and economic watchers were actually calling on him to reduce the MPR at a point when inflation was moderating?
Yeah, I mean, he was seeing the unemployment level. He was seeing the inflows. He was seeing the debt profile. He was seeing all kinds of things. Don't forget that the overall assignment the Central Bank governor or Central Bank has is financial system stability. So when you are pandering to emotions and to emotions, it doesn't go that way. He goes to the realistic things. What can I do that will stabilize the financial system? That will bring some pain. And a courageous central bank will take what it takes to take that decision. And luckily for him, I don't think there's any intervention from the government on this present governor. I don't think there's any government intervention on him. So he's able to take decisions based on what is realistic. It's like a doctor giving you some injection that may be painful or some bitter pill that you have to take if you have to heal. So we should trust in his judgment because he has overall a holistic view of the economy. He's seeing it from the apex point of view. Numbers of unemployment, the inflation rate, the export, the import, the activities, the money generation, everything, he's seeing them on his desk. And he's trickling with the monetary policy tools he has to manage to change this thing around for the overall financial system stability. That's what we don't see. We are seeing the top of the envelope. We don't know what is inside the envelope. He sees everything, and we should give him the confidence and the time and everything to take decision. And happily also for him, he enjoyed this professional cordial relationship with the fiscal authority as well, which wasn't the case before. So he is able, because he's the manager of the economy, and we should have to trust his judgment. He tells us where we should go, and we should believe him. He has professionals around him who are advising him also and interpreting the real situation to him. He's not the one that will just impose his views on people. So, I mean, that's what I'm observing from outside. And therefore, he's being guided professionally and above all, using data to arrive at his decisions. So let's trust him. Let's believe him.
Indeed, let's trust him. But talking about trusting him, let's look at it does seem that he has abandoned the unorthodox policies in the management of the monetary policy. If you remember in 2015, between 2015 to 2023, when the former governor was in place, we saw direct financing of government deficit, forex restriction, and sector-specific interventions, talking about loan, and of course, with a standard interest rate adjustment by the CBN. We recall the CBN interventions in the anchor borrowers and so many other activities that are outside the CBN mandate. Do you think moving away from those unorthodox policy and focusing on the main, the core mandate of CBN has in any way helped in stabilizing the economy?
Most definitely. Like I said, I alluded just now that this governor is not political at all. Meaning that he's not doing things to promote a government he's serving under. Look, the things that can lead the drivers of reserves, of foreign reserve or foreign reserve, that different but nearly the same, is oil shocks, then central bank intervention to support the naira, and foreign investment flows. Now, the intervention that the former government was doing was sad. That it was so sad because there's no measurement of its implementation. When the anchor borrower, for example, came on, when money was given for rice farmers, how many rice farmers were given? What was the quantity of rice that were produced? What did we gain from it? Nothing. So this intervention, building universities, all kinds of things, the central bank became like a developmental bank, which is not. Their core mandate is not. They're not supposed to be development banks. They're supposed to carry out monetary policy issues. So that coming from there, is actually helping this economy, because if he was politically inclined to, he would have been played to the gallery. In fact, I don't see him in newspapers, which is a kudos for him. I don't see him anywhere. He's just professional, and that's what brings confidence in the external, in foreign investors, to see that this governor is interested in the management, focused on management of the economy, and not playing to the gallery. Intervention that has no monitoring, intervention that has no performance indicators. You don't know how this intervention have done. How has it impacted on the lives of the people? How has it? Otherwise, in fact, on the other side, the interventions were actually very inflationary. They were just jacking up stuff, hitting the market by such interventions, and that was very, very harmful to the economy then. I think this level-headedness and calmness of this present governor will help develop this economy or improve it even better.
Another issue that we had was the issue about the management of the ways and means. If you recall, during the last dispensation, over 23 trillion naira ways and means were actually given to the government. This is in violation of the CBN Act 2007 there. But given what we have now, do you think we are seeing the proper management of the ways and means now, as the case may be?
Definitely. Have you heard of what I mean of recent? I've not heard of it for the past 2 years. And that's also kudos to the personality of this governor. I heard, I heard, and which is what I actually like in him, because I was given an interview by AIT Nancy one time, and I told them that a central bank governor must crave for independence, and that he must be allowed to do his job, and that a credible governor will walk away from his job if he's intimidated, or if he's told to do things that are not professional. This governor is capable of doing that, and I heard that he would have gone earlier on his own if he wasn't allowed to do what he's doing now. So, if government pressurizes him to do with this ways and means, all he will tell them is, this is the law, this is the act, anything above this, I'm not able to do it. This person can do that kind of thing. I believe him that he can take on his guns and say, look, we can't go further than this. Unlike the previous one that cannot respond professionally to government. So the ways and means was abused, it was inflationary, and definitely disastrous to the economy. And so if he abides professionally the way he's doing, I cannot see this government abusing the ways and means the way it was done in the previous administration.
Dr. Omale, are you implying that the CBN is now autonomous?
It should be autonomous. I mean, it should be. I mean, it should be.
It should be autonomous. But do you think it's 100%?
It should be autonomous. And mine is that even if they don't give you, if there's no law saying that, look, all over the world we're praying or we're craving for the independence of central banks. And in the UK, in the US, even in the US, you can see a lot of interventions by the government. But the governors, they stick to their guns. They rather go than be manipulated by government. Government are political. They want the people to applaud them, to vote them back to power. So central bank governors can crave for their own independence by the way they respond to government requests. If I, as a governor, am told to do something that I know on the long run will affect the economy negatively, I will not do it. If you insist, I'll say, hey, this is my letter, I leave. This person, this governor is capable of doing that kind of thing. And I think he has even gone before. So what I'm saying is that you, as the governor, can make your independence. You put your rules down. If you have given me this job to do, allow me to do the way I'm trained to do, the way I'm professionally prepared to do it. Anything outside of that, I walk away. I want governors to be like that. I want government officials to be like that. I want commissioners, I want ministers to crave their own independence based upon their own integrity, own duty to the society. You don't have to be given that you are independent now. No, you can't do whatever you want. So yes, central banks should be autonomous, independent.
All right. Let's look at the management of inflation, exchange rates and as well. Inflation currently is about 15.15%, thanks to the rebasing of the CPI by the National Bureau of Statistics. Of course, also thanks to the CBN policy in management of the monetary policy rate as well. But do you think at the current rates that we are now, given where we were in 2024, we understand the rebasing also push the inflation down to this number. How long do you think we can actually, take us for us to get to that single-digit inflation that the government is, and the CBN itself is targeting as well?
Yeah, well, it will take time. And also, these figures will be tested as time goes on. It will be tested. For example, if food inflation was low this time, is it because we're in harvesting season? Or is it because a lot of imports were made? So these are some of the things. See, this is, economics is a live profession, it's a live subject. It's real, it's realistic. We'll talk about real economy. It's real, it's things that we can see by our faces. So that will be left to the market forces to determine. But that target alone, that desire alone by the fiscal and monetary authority to get to to single digit is good enough. Because if you don't have a target, you have arrived at your target. So this target will guide their behavior now. Fiscal discipline. So that the fiscal arm of this administration will not be engaging in things that are inflationary. Monetary discipline, arriving at monetary policy rates, using your monetary policy tools to regulate the economy, hit it up, lower it. They have treasury bills, they have all kinds of instruments they have in their hand to increase or decrease, or to decrease the heat of the economy. Let them do it professionally, and a realistic figure will be arrived at, and it will be seen by all. And this will help foreign investors to come in. Because you don't want to bring, you see, it's so important that this is one of the indicators, macroprudential indicators of investments, of investors coming to a country. If I bring my £100 to Nigeria today, I begin to do business in Naira. When I want to buy that £100, and £100 sells for 20,000 Naira, by the time I want to take my money back, would I need 40,000 Naira to buy the £100, if you see what I mean? So that's what people are thinking. So when inflation goes down, it will help to encourage foreign investors to come in. Because inflation is a cancer. It is into income. It is into profits and all kinds of stuff. Right. So I think realistically, that's the best we can get as of now. And I'm sure the Central Bank and other authorities will always adjust when they see that things are not realistic enough. I can trust them for that.
Indeed. Naira has also remained strong against dollar in recent times, continuing to record gains since last week, currently at about 1,380 Naira to the dollar. This is very impressive from what we've seen in recent times. Do you think Naira is gradually finding its fair value against major currencies of the world?
Again, this can be, time will tell. Because there's a law, LUOLL. There's a low activity at certain parts of the year. If, for example, we just passed through the Christmas where a lot of foreign exchange came in, a lot of people traveling to Nigeria and dumped their Naira and foreign currencies. Is that why the demand for the dollar is low? So these things, time will tell. But the basic thing that determines the strength of your currency is the relationship between your export and import regimes. As long as we still have this hunger for foreign exchange, as long as our education is outsourced, our medicals is outsourced, materials are outsourced, food, so many things are foreign currency based, we're going to have problem keeping the Naira afloat at that rate, because it's a matter of demand and supply. If we reduce our consumption of foreign goods, if you begin to produce inward, we have no need for dollar or for other foreign currencies. And then our naira will be strengthened. So it's a matter of demand and supply. If the demand goes either way, the naira will move the same way. So time will tell.
Indeed, time will tell. But let's look at Nigerian foreign reserves now. And of course, the FX management as well, very, very important. When the new governor came on board, the first thing he did was to clear the FX backlogs that we had in Nigeria at the time. And of course, part of what he also do was to boost the non-oil export instead of relying so much on crude oil there as well. This in a way of encouraging foreign direct investment into the country. But given where our foreign reserve is right now, 46.7 billion, which is well enough to finance 14 months of our import. Do you think we can do more with what we have now, or we are at a stabilizing, we are having a balance right now?
No, we're not having a balance. We're having a growth rate. Because, I mean, we're talking about a country that is 60 years old, still grappling with foreign reserve. Foreign reserve, or I'm talking about foreign reserve or foreign currency reserve. Foreign reserve is different from foreign currency reserve. So, but let's talk about foreign reserves. Foreign reserves is the total assets that, including special drawing rights and the value of the currency they have. So that's they're not exactly the same as foreign reserve. Anyway, what I'm saying is we were, even General Obasanjo's regime, we were 62 billion. So that's where 2018 or whatever that date is. That's where we're heading to. So until we get to that point, we have not even said we're stabilized anywhere. And when we have countries like South Africa that has 170 billion, we have countries that have, in Africa, Kenya, we're ahead of Ghana. We're ahead of maybe Ethiopia, some of that countries. But we should be aiming for higher foreign reserve. Again, it's not in our hands. It's not in the hand of the governor. It's not in the hand of anybody. It's in the hands of the three things that help that is oil. And like you said, this government, this central bank has emphasized diversification and going to giving preferences to things that will improve income from non-oil sectors, which will help to boost the reserve. Because the fluctuation in the crude oil market can actually erode whatever reserve we have put all together all the time. Then there are also intervention for the naira. What they call defending the naira is also important. That they don't allow naira to sink. To be allowed, no government anywhere in the world allows its currency to just float by the market forces. None. There is some kind of intervention. There's a kind of intervention they do, and Central Bank, I'm sure, is twinkling with that to ensure if you can be backed up by production or by non-importation or lesser importation and more exports, that would defend the naira, and also attracting foreign direct investment will help boost the foreign reserve, because foreigners come with their money to invest, and that can only happen if also the fiscal authority is able to provide enabling environment. The central bank can do as much, but it's one side of the coin. It can only do half of that. It must be complemented by the fiscal authority, rule of law, infrastructural development, and all kinds of stuff that will attract foreign investors. That's beyond central bank. Central bank can only use monetary tools to regulate the tempo and the temperature of the economy.
Indeed. Since it does appear that there's a good handshake between the monetary and the fiscal authority, let's look at the balance of trade as it is right now. And how do you think we've been able to, achieve, given the proper management, like you mentioned, of the FX reform of the CBN, the promotion of non-oil exports, and of course the stabilization of naira to drive structural and positive trade balances? Do you think the proper handshake between the monetary and the fiscal authority has in any way strengthened our balance of trade?
Without a doubt, without a doubt. In fact, because the thing is this. Central Bank, for example, gives from M and all that. They look at the money, at the payment size of our trades. Fiscal authority gives the rules and the conditions and all kinds of stuff that allow for foreign trade. They go into alignment. They promote Nigerian all over the place. But the enabling environment or the payment system and the transaction aspect is done by the central bank. So the synergy, what you are calling handshake, I don't think it's a handshake by the time. It's cooperation, collaboration. If you call it handshake, it's a different connotation, by the way. It's collaboration. Sorry? Partnership. Okay, yes. Exactly, partnership. And that should be, and that's what it should be, that the central bank and the fiscal authority should work hand in hand. The fiscal authority promotes the exports, promotes Nigerian goods, maintain relationships with states, with governments around the world, promoters go on road shows to market Nigeria, and also to help development of goods and services that can be exported outside. That is their role. And also to attract foreign direct investors. And central bank helps in the smoothing, in the way they do the interest rate that will help money to be given to the people that want to establish businesses or expand on existing ones. Those terms and conditions, management of banks and supervising them to ensure that they are doing proper banking and not transactional or trading banking, but are actually doing money intermediation, creating assets, creating loans that will improve the production and manufacturing of Nigeria. Yes, that is about the little way. So bottom line is trade relationship or trade balance is export import. If I export more than import, or every government want to be ahead, want to be at advantage. Right. But if you're at disadvantage to all the countries around, to China, who are deficit, to America, to everywhere, then you are in trouble. If it's not balanced, let not the deficit be too wide.
Indeed, the deficit should not be too wide, even if it's not balanced. Just in 30 seconds before we go, how much of impact do you think the remittances inflows has in any way helped in stabilizing the Naira?
Without a doubt, like I said, during Christmas or the intervention from diaspora to Nigeria. In fact, in other countries, diaspora remittances is an economy by itself. And I think I hope they're doing something like that. They should be able to even, I think so, but I'm not sure, but central banks should be able to even develop that economy in such a way that they manage or they monitor all the inflows and give assurance to the diasporans who are bringing money to the government, to Nigeria, that this money they're bringing in is not just for paying school fees and doing burial and all that, but should be structured in such a way that diaspora can actually bring money home and invest in Nigeria with assurance that if I bring $100, I'm going to $100. I don't have to squeeze my head. And also, I know what this dollar is going to. So, central bank can manage the inflow into investment flow. They can create investment channels, housing, power, whatever it is, stock market, so that people can actually be investing in that. I think central bank wanted to do something like that. I don't know whether they're doing it, but I want to understand that they have a formalized way of attracting diaspora from bringing money to Nigeria. Definitely, remittances are very important to an economy.
Yes. Thank you so much, Doctor. We have to go now. A lot to talk about, but time is always not our friend. Dr. Sam Omale, President, CEO, Rock Global Investment Network, speaking to us all the way from London, United Kingdom. Thank you for your time.
Thank you for having me. God bless.